you're trying to decide between living on the Oregon side or the Washington side of the Portland metro, this is a conversation you need to pay attention to, because a lot of people oversimplify this. They say, well, Washington has no state income tax or Oregon has no sales tax, and that's it. But that's not the full story, because when you actually start looking at the numbers, income tax, sales tax, property tax, excise tax, business taxes, local Portland taxes, gas tax, estate tax, capital gains, two people making the exact same income can end up in very different financial positions just based on which side of the river they live on. If you are thinking about relocating here, I help people just like you do that all the time, so do not hesitate to reach out if you want help comparing both sides of the river and figuring out what actually makes the most sense for your situation. Now, I want to say that I'm neither a financial advisor nor a CPA, and this is not tax advice. This is a practical relocation video and I break it all down. So let's start with one that changes everything, and that is state income tax. In Oregon, you do have state income tax, and the top brackets go all the way up to 9.9%. The lower brackets are 4.75 and 6.75. But for a lot of people, the reality is that a good chunk of their income is going to land somewhere between 8.75 to 9.9 range. And that's why so many people just round it to about 10%. So let's make that real. If you've got a household income of, let's say, $150,000, in Oregon, you can very easily be starting at 5-figure state income tax bill depending on your filing status and your deductions. Now let's compare that to Washington. Historically, Washington had zero personal state income tax, and that has been one of the biggest reasons people moved from Portland to Vancouver or Richfield or Camas, anywhere in Clark County. Now there is one problem here, and that is the Millionaire tax. That's also referred to as Senate Bill 6346, and that bill states that people who earn over $1 million will be taxed about 9.9% a year, which supposedly targets around 1% of the high-income taxpayers, generating roughly around $3.7 billion annually for the state's general fund. That should go in effect somewhere around 2028. There's still some debates going on. It's not 100% certain, but it kind of is. So if you are not making $1 million a year, Washington still looks very different from Oregon on the income tax side. But if you're a very high income household, then yes, that changes the conversation. Now, there is another part to this people get wrong all the time. If you live in Washington, but you physically work in Oregon, you generally still pay Oregon income tax on wages earned in Oregon. So just moving to Vancouver does not magically make Oregon taxes disappear if your job is still physically in Portland. Now, if you work remotely from your home in Washington, then that income generally is not subject to Oregon state income tax. And if you split your time between the two states, then your income has to be allocated based on the days you physically worked in Oregon. That part is huge because a lot of people just assume, oh, I'll move to Washington and I'm done. Unfortunately not. If you're still physically in Oregon doing the work, Oregon still wants its money. Now let's talk about where the Oregon side starts getting even heavier, and that's the extra Portland area taxes. Because it's not just Oregon state income tax, you can also have local layers in Multnomah County, like preschool for all, supportive housing services, and even the $35 arts tax. The preschool for all tax is around 1.5% if you're earning an income over $125,000. If you're single, and $200,000 if you're filing jointly. Then there is an additional 1.5% to a total of 3% if you are earning above $250,000 as a single and $400,000 filing jointly. And Multnomah County has one of the highest combined local tax burdens in the country for high income earners, with a combined top marginal tax rate of 14.7% for people that are earning more than $125,000 as singles or $250,000 as filed jointly. That's where a lot of people start feeling squeezed and avoid Multnomah County, because at that point it's not just Oregon state income tax, it's Oregon state income tax plus local layers on top of it. Now let's look into one of Oregon's biggest advantages, and that is sales tax, or really the lack of it. Oregon has no sales tax, and that that is a real benefit. On Washington side, you've got 6.5% base state sales tax and then local taxes added on top of that. In Clark County, the range is between 7.8 to 8.8, with Vancouver being the top at 8.8. There are also categories that can push that burden even higher depending on what you buy. Things like alcohol, soft drinks, cigarettes, tobacco, short-term rentals, and certain services go as high as 10.7% depending on the purchase. So yes, Washington absolutely gets you on the sales tax. And that is exactly why so many people who live in Washington still go over to Oregon for bigger purchases. Technically, you still have to pay taxes on those, but in reality, not everybody does. Because when you skip almost 8 to 9% sales tax on big purchases, that really adds up. Now let's talk about property taxes, because this part gets misunderstood all the time. In Clark County, Washington property taxes is based on assessed value, not what you paid for the house, and the assessed value often lags behind market value by around 10 to 25%, with 20% being the most common range. The exact amount depends on school district, fire district, water, sewer, levy districts, all of that. But the rough rule of thumb is about 1% of assessed value. So on a $600,000 house in Clark County, you are generally looking at around $5,200 to $6,500 in a year. Now, on the Oregon side, property taxes can vary a lot more depending on the area. For that same $600,000 home in Portland Metro, the estimates are around $6,000 to $9,000 a year, with some higher areas pushing up to $10,000 or maybe even $12,000. So again, this is not just Oregon versus Washington in some broad, abstract way. This gets very neighborhood specific very, very quickly. Now let's talk about the tax that people forget until they are the ones paying it, and that is excise tax when you sell, or real estate excise tax, REIT. In Washington, when you sell a home, you pay real estate excise tax. It starts at 1.6% of the sales price and can go up to 3.5% depending on the tier. And the reason people hate this one, it's because it's based on sales price, not your profit and not your net proceeds. So on a $600,000 home sale in Clark County, that excise tax would be roughly around $9,500. That is a big number. And if your plan is to buy, stay for a few years, build equity, and then sell, this absolutely needs to be part of your conversation. Now let's compare that to Oregon. There is no comparable statewide excise for selling a home in Oregon. However, in Washington County, when you sell a home, there is a tax. It's $1 per 1,000 when you sell your home. So a $600,000 sale would equate to $600 paying in taxes. And that's technically paid 50-50 between the seller and the buyer, where the excise tax is fully paid by the seller in Washington. That is massive difference from $9,500. So if you're thinking long-term, do not ignore that. Now let's talk about gas tax, because this matters more than people think, especially if you commute. Washington's gas tax is about 55.4 cents per gallon, and in Oregon is about 40 cents per gallon. So if you're driving a lot, yes, that adds up. And if you live in Washington but commute into Oregon every week or weekday, now you've got Oregon income tax if you physically work there, plus commute costs, plus gas. That's where lifestyle and tax math starts colliding. Now let's talk about estate tax. In Oregon, the exemption is $3 million, and then after that, the tax ranges from 10% up to 35%. In Oregon, the exemption is $1 million, and the range is between 10 and 16%. So Oregon kicks in sooner, but Washington gets a lot uglier at higher estate values. That matters if you have serious assets, investment property, long-term wealth, or you are thinking about what you are actually leaving behind. Now let's talk about capital gains. Washington's capital gains tax is 7% and applies to long-term capital gains, meaning assets held for more than a year, and real estate is currently exempt. The first $270,000 indexed annually is exempt before that tax applies above it. Oregon handles this differently. It's more like ordinary income tax, usually between 8.75 to 9.9%. Oregon is also following the federal exclusion for primary residence, meaning up to $250,000 in profit if you are single, and up to $500,000 if you are married can be excluded on a qualifying home sale. So again, not as simple as it looks on the surface. Now let's talk about business owners and 1099s income, because this is where Washington can sting. Washington has B&O, or business and occupation tax, and that is a tax on gross receipts, not profit. The rates are 1.5% under 1 million revenue, 1.75% from 1 million to about 5 million, and 2.1% above that. That means even if your expenses are high, Washington is still taxing the money coming in. And yes, this can apply to 1099 contractors too. Oregon does not have that same broad gross receipt tax on 1099 earners, although certain business structures can still have other taxes. So if you're a W-2, Washington offer starts looking stronger. If you're self-employed, you need to slow down and really run the math. Now, who does all of this matter to the most? It matters a lot to high earners, dual income households, remote workers, and people whose biggest financial engine is W-2 income or self-employed income. Washington often starts looking much better on paper, especially if you are not physically working in Oregon. If you are a Portland area high earner inside Multnomah County, those extra local tax layers can make Oregon's side feel a lot heavier. But Oregon still has real advantages too. No sales tax, a much lighter selling home tax burden, and for some households that matters more. So there is no one size fits all answer here. The winner depends on how you earn, where you physically work, how much you spend, whether you own a business, what kind of home you want to buy, and whether you care more about annual cash flow or long-term exit costs. So here is the bottom line. If you are relocating in the Portland metro and trying to choose between Oregon and Washington, do not just say Washington has no income tax. Don't just say Oregon has no sales tax. That is not enough. The real answer is in the full picture. Income tax, local Portland taxes, sales tax, property tax, excise tax, gas tax, estate tax, capital gains, business tax. That's where the real decision lives. And once people actually run those numbers, it starts to make a lot more sense why so many households are looking to move to Oregon or Washington. And again, if you're thinking about relocating here, I help people just like you do that all the time. So do not hesitate to reach out if you want help comparing both sides of the river and figuring out what actually makes the most sense for your situation.